Okay.
Okay. Good morning, everyone. Thanks for attending our session today. I see we've got a very overwhelming response online, and I know that amongst the attendees, we've got our colleagues from the actually our bosses from the Department of Sports, Department of Sports, Arts and Culture. So without wasting anyone's time, I just want to introduce the topic of today, which is the South African Sports Impact Calculator. This comes, or this was inspired by the calculator that we first did some few years back, the South African Festival Impact Calculator. My esteemed colleagues here who will be doing their presentation, Professor Kumalo and Mr. Tarantal, who will unpack it for you in detail how it works, but basically is to help events organizers, more so in this case in the sports sector, to calculate the impact, the social impact of the sports, the economic impact of the sports that it has in terms of the community, the organizations themselves. Without wasting a lot of time, I'll hand it over to you, Prof. Kumalo, and you can do the introduction and take it from there. Thank you.
Good morning. Thank you, Titus. Good morning, everyone on the platform. Thank you for making the time to join us today and help us as we build towards enhancing our understanding around the impact of our sporting and cultural events. I'll be doing this presentation with Mr. Dylan Tarantal. He will do the second part, and I'll focus on the first part of the presentation. So to get going, we can just look at the presentation outline. Ideally, what we want to do with this presentation is take you through a bit of the context, just to give a bit of background in terms of our thought processes, and then just understand how those influence the way we've structured the calculator in terms of the events and the inputs that we have identified. And we'll then just look at some of the nuts and bolts, not in detail, but the idea around the multipliers and why we kind of went with those. And then we also then start looking at how do we then bring about and consolidate the idea around the different sporting codes. So we had to look at the spectators, the participants, and then try and understand how those would then be filtered in this calculator, and basically how that links to the final outcome, which is the reporting itself. So I will take you through the first sections of this presentation, and then Mr. Tarantal will take you through more of a demonstration around the presentation itself. So when we're looking at the context and the method, this conversation is important, and we had to understand why it was important and why it matters, because as South Africa, we host a whole lot of gatherings, whether you're thinking of it from community-led fund runs to global mega events. But all these kind of then speak to a point where we need to then be able to make certain decisions around these events. And because one, some of those events involve public money, so there's a lot of questions around public policy and the spending of money. So when you think of it from the government, from sponsors, from ratepayers, how some of this infrastructure, where they think of stadiums or the grants that are being used, are basically influencing and improving or impacting our society and economy. Second is the perspective, whether we're thinking of it from the reality versus the hype, and we need to be able to separate the two, because we don't want to overpromise and then at the end it seems like we underdeliver. And third, that leads to the better decision, which is basically evidence-based kind of decision making, where you've got sound evidence to help you justify why you make certain decisions around this. So just a quick overview around when we talk about economic impact, what is it that we kind of try and focus on? And the idea is just think of it from a perspective of new money coming in because of an event that's happening. And then how does that money permeate through the local economy, right? When you're thinking of businesses and the households. So that's the idea around an economic impact study. So the focus is on the new money. So you need to try and isolate the new money, and then how does that permeate through the economy as um, based on the locality of that event. So it's not designed to measure the social or cultural or sporting value, but it's just about the economic flow of the money, right? So in that kind of study, also then think about who's spending the money, because that will help you answer some of the questions about where the money is coming from. How much of that is actually then being retained within the local economy, and how much further does that money travel before it exits the local domain that you're focusing on. So these are some of the things that we kind of grapple with when we're thinking about designing a calculator of this nature. So ideally, our angle or lens was we have to think of it from the ripple effect approach, where we understand that there's going to be a direct impact, which is being able to identify that new money, okay? And this new money would be spent, whether you're thinking of it from visitors, athletes, organizers, etc., how it's captured, whether it's tickets, it's accommodation, transport, food, all that. But we'll then have a second round, which is basically the indirect impact, which is where now we're thinking about the businesses that receive that money, right? And how are they spending that money, right? Is it related to the local economy itself and the focus around the local suppliers? And it then takes us to a third level, which is the induced impact. So where we're looking at understanding that once you've got the businesses, how about the consumer? So the workers now that are related to these businesses, how then do they also then spend? So you kind of have this triple ripple effect that we try and then consider in the way we value our impact in this particular calculator. So with that said, the size of that ripple, okay, will depend on one, whether you want to consider just the business to business side. So the first two parts that we mentioned, right? The direct and the indirect effects. So we kind of then classify that as type one. So that gives you that effect that goes from the new money and then into the business sense. But if you want to then extend it and include the third ripple, so to speak, which is the induced effect, we then have what we will call the type 2 um, multiplier. So now this allows you to then have I'd say, broader picture in sense of how this money then permeates in the locale of that particular event. So why this is important is because it doesn't assume that all the money that comes in is what will permeate locally, right? So we do have leaks, and leaks will happen in any space. But the effect of those leaks then means the impact of the new money then will vary. And hence you find that when we then look at the calculator, we now add a certain tier, which is the low intensity, normal intensity, and high intensity leakage, just understanding the leakages from that perspective. So once you see a situation where you understand your locale and you realize that there's a high leakage, that a lot of the new money does not stay within that space, but it actually then permeates out of the space or the locale or the area, then in that case, you have a high leakage. So that's the kind of intensity you'd want to then use in that space. If there's quite a significant amount of retention that's happening, we've kind of then classified that as the norm, which would then be the normal intensity. But if there's higher than expected retention, so the leakage is quite low, then this is kind of an optimistic approach in terms of your settings, where you then opt for the high intensity. So in that case, you're saying there's minimal leakage and a lot of the new money is actually staying within the locale where the event is actually then happening. So ideal, what informs this is that you have different ways of looking at it. You've got what we look at the input-output approach, and then you'd have a social accounting matrix approach, or you'd have a computable general equilibrium approach. Now, all these are different, and that's the thing that you also then have to grapple with because they will give you different outcomes at the end of the day. Where we find generally the input output and the social accounting matrices tend to give a bit more optimistic estimates, but the computable general might be much more cautious in its approach. But the issue with that obviously is the amount of data that you need to be able to actually then use that kind of um, framework for you to then deal with the estimations and the analysis that you are actually undertaking. So what you then find is even if we go to the evidence from the literature that there will be differences because of these models. But what is important for us is to then understand how, if you're looking at a particular event, how does that event impact the locality? So the role of the locality in that on that particular event, and what does it then mean for the leakages? Because this then speaks to your choice in terms of around the intensity of the multiplier that you're looking for. So if you use the same data and you apply different methodologies, you will get different outcomes. That's the reality of the space that we're in. But we need to then find a way of ensuring that at least you are able to pair your multipliers well with the characteristics of that particular space in terms of the linkages. So that's very key for us in this particular calculator. So now, because we're dealing with sporting events, I think um, we had to grapple with a whole lot of other dynamics that come into play. And one aspect that we thought will probably also be quite influential is how do we classify these sporting events? Because on one side, you could look at the FIFA World Cup. On the other side, you could look at a local park run. And we had to then differentiate because those two will have to be treated differently on the calculator. So you will find that we've got what we'll look at as mega events, and then we'll have what we'll look at as the minor events in the calculator. And it's important to also think about what the implications are for some of these classifications, because you may find that with the mega events, a lot of the the new money tends to leak out quite a bit more than it would be with smaller events. So that's something that might be of interest again to uh, organizers and policymakers as well. So some of these nuances become quite important in terms of how we then classify and structure the calculator itself in terms of the information that you need about a particular event at the end of the day, because that will then influence the actual outcome. So this becomes something that we had to grapple with as well when we were actually structuring the calculator. And in doing that, we obviously had to try and understand that there's nothing that's going to be perfect, and we try and minimize these pitfalls that we could come across. So at times you are in a situation where we end up inflating either benefits or costs, or both, whatever it is that we're looking at. We don't want that kind of approach that can then skew the analysis itself. Second, we need to think about how do you count money that's already there in that particular locale. So, for example, what we're thinking of is how do you exclude local residents from who know would normally have spent that money in that particular space. Um, doesn't matter whether the event was going to occur or not, but you then have to give consideration to that. So you don't want to be creating a situation where you end up double counting some of these inflows. Other things that we need to think about, which is what we're calling these politics of the numbers, is you may have had a situation where some of the spectators and guests or visitors would have been in there in that locale. And because of that, now we need to think about how does that then impact our way of valuing this new money. So those are things that we would have to think about to say someone would have been there on that particular day or date or those day over those days doing something else, but now the event then becomes something that they will also then consider splitting whatever income they had to spend to incorporate into that particular event. And then the last one was around the multipliers, because this being a first in terms of the way we want to do it, you don't want a situation where either you overstate multipliers or understate them at the end of the day. So we had to figure out how best to use the information that we had, whether we've got national or local specific data that can help us in terms of identifying the information that we would need to extract to create some of these multipliers, um, considering different aspects as well, where they're looking at the level of the municipality, the size of the town, and all that as well. So these are considerations that we had to grapple with and try and understand in actually then structuring the calculator. So we were basically guided by ideally these principles where we needed credible data for us to be able to work with. We don't want to do a bit of guesswork here and there. We needed to understand who is who in terms of the attendees. We need to understand how we can minimize inflation of our multipliers. Um, and obviously, I understand the different assumptions that came with the data that we would actually then probably be using and collecting for us to be able to then come up with an analysis at the end of the day, and how this report would then be structured without actually trying to create this um, scenario where everything looks like it's going to be quite fantastic at the end of the day without a bit of objectivity being applied. So when we were looking at the numbers, we need to understand that whenever you look at a study of this nature, we had to understand that there are different uses that would come across, right? So in some cases, you may find that the information that is extracted from the calculator can be used to inform certain decisions when you're looking at, say, comparing bids and proposals and all that. In some cases, it can be used to actually track the actual spending. In some cases, it may be used to evaluate certain expenditure that is actually then coming to space, into play. So the calculator was basically structured to try and ensure that it also takes into account these different objectives that policymakers, organizers, um, investors would probably think about in terms of using the information that they get from the report at the end of the day. So we had to also then grapple with that and figure out how we would work with it. Um, and why that was important is because we are essentially trying to build this tool that can help us, a locally responsive tool that could help us actually then map out some of these patterns that we find on the landscape. And we have taken into account the nuances around the South African economy itself, where they're looking at the provinces, where they're looking at the municipalities, the types of events that we may have in terms of our sporting codes, and the sizes that um, those events kind of attract in terms of attendees, spectators, teams, and all that. But also the behavior of the local attendees as well, right? So how we then have to understand the way our day trippers would behave in terms of their spending patterns compared to those who may want to then actually stay overnight, and also then at the end of the day, ensure that whatever we use as our multipliers, we are not overinflating our impact. So for us, it was quite important that because this is the base that we're building on, we try and make sure that these are the aspects that we think about. Um, this is probably an ongoing exercise, which will then also develop further with further input um, from policymakers and other users of this calculator, which will help with further refining it as we go forward. But the important thing is it's something that we are building for our own benefit to help us in our decision makings at the end of the day. So some of the key takeaways would be we need to understand what we talk about when talking about the new money. We need to understand the different assumptions that may underlie these different categories and multipliers that we use. We need to understand that we need good data for us to be able to make um, a report that's going to be useful and credible at the end of the day in terms of our understanding. And obviously, we have to be quite cautious in the way we use the tool to avoid sensational kind of information and data going out, which will not therefore be actually realistic at the end of the day. So with that kind of approach, the intersection of these interests was quite high in our mind. Um, you have to think about some of these elite level athletic events, but you also need to think about the local events as well and be able to then develop a calculator that can accommodate these kind of nuances and differences that we would expect in our space. Um, we do know that the calculator itself will keep on trying to address the lack of empirical uh, evidence and metrics that we need for us to be able to provide credible information, whether thinking about information that maybe a municipality needs in terms of the impact of sporting events on in their spaces, being able to then standardize some of this information across the provinces so that we can actually do comparative modeling around the provinces and the different municipalities as well. So we will find that the calculator itself will kind of be highly specialized in the way it is being used and designed to try and genuinely focus on what a specific locality would actually then experience in terms of its impact, the economic impact that we would find. So obviously there's important information that we need, and hence databases become important. So comprehensive provincial statistics are very important in this space that will help us. Empirical academic literature is very important in this space. Understanding the different dynamics, whether thinking from the tourism side of the the different provinces as well. This becomes important information that we can then use to further build and refine the calculator itself, and hence build up this database that can provide some kind of historic analysis, which we can then also be used to help make decisions and guide future policy approaches in terms of how we value some of these impacts that we see in this particular space. So in everything that we would advise is when we're dealing with this data is we should be able to clearly isolate what we think about or what we term the new money. Um, in this case, whether you're looking at money that's flowing in locally, whether you think of rand terms, whether you think of foreign currency that is flowing into the host economy because of this particular event or tournament or activity that is happening. So we should be able to isolate that new money. Um, we should be able in the data collection as well to understand that we don't want to double count and hence inflate some of the inflows that we have. So ideal understanding who is a resident in that particular space or in that particular area and who would probably have spent that money in that area anyway, regardless of what the event, whether the event was taking place or not. So it becomes important that when we do our data collection, that we understand some of these nuances that would really help minimize uh, the inaccuracies that we may find when we do the estimates and then when you actually look at the reality on the ground. So it becomes quite important to ensure that these objectives are stringently met when we actually do the data collection that we would actually use for our calculators. Um, in addition to some of the flows, the spatial aspect becomes important as well. We need to be able to define our spatial boundaries because these would obviously have an impact in terms of the size of the multipliers that we would have. So we need to understand better the localized behaviors that can help us then further refine the multipliers in that particular space. This helps also pick up the different leakage um, impacts that we may find. So any transactions occurring outside the special limit, therefore, would have to be treated as an economic leakage. Okay. For example, if food is sourced from a different province, those funds cannot then be attributed to the locale because they have leaked into a different spatial space and therefore are no longer benefiting the locale in that particular space. Um, so you may find that in some cases, remote communities may experience um, cases of leakages, maybe when compared to certain metropolitan spaces, and that becomes quite influential in the terms of the outcome when we're looking at the analysis of a particular sporting event. The other part that we need to consider as well is the scale of these events. How do we then clearly identify an event and being able to properly name it? So you need to be able to understand the different sporting codes that you have and also be able to then classify and name an event in relation to that sporting code. So we feel that the value in the data collection relating to how we classify events is very, very much important for any analysis that we would do. And this will obviously vary with the different sporting codes at the end of the day. This will not be, it cannot be a homogeneous kind of approach in the way we do this. So you need to look at the sporting code. We need to think about the locale in terms of the hosting municipality or the province, the targeted population, the size of the population as well, also in relation to the size of the event itself. So being able to specify the exact event configurations helps the calculator in that particular sense. And hence the understanding of the classification of events becomes important. Linked to this is the idea around the primary geographies that relate to these events. Um, it's quite important that we define these regional parameters as because these influence some of the type of spending that we see. So whether you think of it from an accommodation perspective, the averages in terms of how we spend uh, on accommodation or the amount that we spend on accommodation will vary depending on, say, certain provinces. So when you compare Gauteng to Free State, you do expect that there is some differences in terms of that as well. So where you find that tournaments may span over multiple provinces, you may then have to find a situation where you kind of then find the central operational hub for you to be able to then get a better uh, report in terms of the impact. And this may be something that you then have to kind of think about in your data collection as well. That, okay, so which hub then do we then use to actually then base this analysis that we want to actually engage in? So these kind of issues are some of the these are some of the issues that you'd have to think about in the data collection. So you'll find that in terms of the calculator, you will have different categories, and where we then look at the size of the population in those particular spaces, and then use that to help us in our analysis. So in a category one, you'd probably find a space that has less than 10,000 residents. But in a category six, you've got a space that's probably inhabited by more than 3 million residents in that particular space. So in this case, when you think of the major metros and all that, those would probably fall under category six. So this would also then help you with geographic dynamics that you may also have to deal with in your analysis and how to then factor that in your data collection, because that information then needs to be fed into the calculator to actually refine your analysis at the end of the day. And the issue of the spotting codes. So different spotting codes would have or will produce different behaviors that may emanate from the economy itself. So maybe you may think of something like football and rugby being these events that have this massive outreach, national outreach, high spectator volume kind of sports. You may think of golf as being more affluent in terms of um, the reach, and so all these are things that you also then have to be quite clear about in your data collection in terms of your type of spotting codes that you are actually then focusing on. It might be difficult if you try and combine a whole lot of spotting codes and trying to analyze the impact at the end of the day. So we did try to grapple with this as well to try and differentiate some of these spotting codes. The way you deal with the athletics events would probably be different to the way you would deal with, say, a football match or a rugby match or a rugby tournament at a particular point. And therefore, this becomes something that feeds into the kind of data that we need to then collect um, to refine our analysis. Um, Similarly, when you think of it from a socioeconomic perspective, um, some sporting codes tend to be national drivers. Um, for example, when you think about football and the Springboks, that's something that would probably come into mind. And some of these may have greater social cohesion impact. So you may think of them as social cohesion anchors, and hence the influence of these events might have a deeper localized impact. So when you think of maybe of job creation or community development initiatives and all that. So these are things that you also then have to think about in terms of your analysis, how some of these numbers may speak to some of these aspects, which may not readily be measurable, but we need to be able to then intertwine them with the analysis that we do in terms of our our um, our impact and our economic impact. The next section is just on the multipliers, where again, just to reiterate the idea that we're looking at this injection of new money, which would circulate within the local economy. But we need to then take into account that there are possible leakages that do happen. And hence the idea is if you feel pessimistic about the retention of this new money, in this case, you would probably prefer low intensity multiplier. if you feel quite optimistic about the strength of the retention ability of that particular event in that particular locality, then you'd probably be better off with a high intensity multiplier. So these multipliers basically just speak to your ability to ensure that where you've got high leakages, you are not overestimating the impact of your event. So the leakages become quite an important influence of this analysis based on how you then set up your multipliers. So in a case where you may find certain characteristics, for example, where localized supply chains are quite highly fragmented, um, you may actually find that maybe in that particular space, there is quite a high level of leakage that happens in relation to the new money that comes in. So these are some of the dynamics that may then influence your selection of an intensity multiplier for the same football match that may happen in two different provinces, or the same football match that can happen in two different municipalities. So we would not expect that because it may be the same teams playing, that the impact will just automatically be the same across these different setups because of some of the characteristics that you may then find within that particular locale or that area that you are actually then focusing on. I think ideally it's always good to have evidence around how you collect your data. And it's nice to always reflect on some of the steady baseline information that you have around your municipalities or your provinces, thinking about some of the historical information. So looking at long-term average metrics that can be verified by, so for example, academic economic audits. So these would also then help in terms of trying to understand the economic setting, but also it helps us in terms of how we then set up the multipliers as well for the particular different setups and provinces that you may find. I think ideally, if you're thinking about an optimistic market outlook, you'd want a situation where you've got strong localized vendor networks. You've got diversified municipal production capacities. You've got low reliance on external provincial suppliers. You've got highly active secondary consumer markets in that particular space. These are kind of the optimistic indicators that can help you then actually pick a high intensity option in terms of your setting. Um, as this can guide you in terms of how much or the level of leakages that you may expect to find in these particular locales that you may be operating in. So with these characteristics, you may find that there's less incentive for a leakage and a higher probability of retention that comes in if capitalism is, or if new money comes into that particular space. Um, you are likely to then select a high intensity level as compared to one which would be much more fractured and disaggregated and more likely to actually then experience greater financial leakages. So with the multipliers again, just to reiterate that you can look at them from two perspectives, which is the type 1, which would be your direct and the indirect combined, and the type 2, which is basically your type 1 plus the induced as well. So the type 2 tends to be a bigger picture kind of multiplier that you want to then consider when compared to the type 1 option. It's also important to think about how you measure the time frame of these events. So the length of an event is quite important. We think of it from a temporal parameter perspective. So you need to think about how many days would you want to then consider for this particular event. depending obviously on the spotting code and other factors that come into play. So we understand that there's certain buffers that we may put in place. So for example, a standard two-day travel buffer is applied. That's one of the assumptions that we had. So you probably would arrive a day earlier and depart a day after the competition, which is on average what we kind of expect. So these are some of the buffers that we would have put into uh, the calculator itself. The modeling, we've kind of then put it in a case where by default, the model will scale visitor overnight stays to 50% of the combined duration. Again, this is basically just based on historical data that we have kind of sift through and some of the economic literature that we also then looked at as well to help us kind of make some of these default settings within the calculator because the length of the event is quite important in terms of how you then calculate the impact at the end of the day. The fourth aspect would be the filtration in terms of the attendance. Again, here we need to be careful in terms of how we capture this information. So whether relating to your tickets, your gate entries, and all that. It's important that we need to think about the idea around the new money. Um, would obviously mean that some of the information that you're dealing with, you may have to subtract some kind of component of the spectator base to ensure that we remain with a classic new money kind of flow that you want to then use in terms of your analysis. So you may find that certain filters would be required when you're dealing when collecting this data around the local residents spectator base. So in terms of that base, how do you then deal with the spending that they actually then uh, engage in some of these sporting events? Thinking about maybe casual visitors who maybe will be visiting and it coincides with a particular event at the end of the day. How do we then also then think about capturing that in trying to deal with the new money that we want to then include in our input at the end of the day. So these are some of the things that the spectator demographics will have to kind of lead us to in terms of the kind of information that we then want to input into our calculator. So you will have the resident filter, where local residents are defined as individuals within the designated spatial um, boundary. So technically, their expenditures will not necessarily constitute new money, because what you're looking at is a situation where if you think of it from an opportunity cost perspective, the resident may have actually then spent that money elsewhere um, within the local setup. So that income would have flowed into the local economy anyway. But in this case now, it may be viewed that we are seeing them as actually just choosing to spend it this way instead of using option A instead of option B. But either way, they would have just spent that money within their local perspective. So this idea of the opportunity cost becomes important in terms of how we collect the data as well, for us to be able to avoid this kind of double counting that may inflate some of the flows that we actually then perceive to be new money in this particular case. Also need to think about casual tourists, how we will then be able to think about them and identify them. Um, we also need to isolate what we call these co-drivers. Okay. So individuals whose primary reason for traveling was explicitly to attend the event. So these are the core drivers of the new money that we would basically be looking for or looking at in terms of their expenditure, and how it's then coming in into this particular space. So as I was indicating earlier, the data collection is quite important in terms of the outcomes that we actually get um, for this analysis that we actually then have. So you'll find that the calculator will specify certain aspects. So for example, it will explain the definition of what maybe a day tripper should be. Okay. It will explain what an unpaid lodger would be in this particular case, or what a paid lodger would be. So depending on the category of the spectator that you have, you also then have to think about the expenditure elements that can be evaluated from that particular um, category. So when you're thinking of the unpaid lodgers, uh, these would be staying overnight, but then obviously they've got friends and family. So we cannot then attribute their accommodation expenses to actually new money in that particular space. So that may be something that you then have to think about in terms of the data itself and how you then collect it. But obviously, they may be able to spend that money buying a meal for overnight meal or something, even though they are unpaid lodgers at the end of the day. So these categories try and help us nuance some of these differences that can come up from the different participants that we may find in our events. And similarly, we would have to think about the, for example, here, how much you would spend, say, for example, if you're in Gauteng, and how much you would spend if you're in the Free State or in the Eastern Cape, as this will then have a direct bearing on the inflows that we're looking at. So when you're thinking of average daily commercial overnight spending, um, it will differ by province, and hence this differentiation becomes important in terms of the inflows. So the calculator will provide configurations to try and create these standard empirical benchmarks. And these were basically sourced from the local databases to help us actually then come up with these figures as well in terms of what we could spend overnight in the different provinces as well. And when you think of the other expenditure that we've identified, um, you may have expenditure that relates beyond the spectator or the spectators themselves, where you've got the athletes as well who are going to spend, the coaches, the officials, the support staff. Some of these are flows that will have to be captured as well, for us to be able to get a bigger picture in terms of the impact that we're talking about. And you will find that the calculator does account for that. Um, there will be variances here and there, um, because some of the events may require you to acclimatize and train as athletes or as participants, I mean, in that particular sport. And hence, these nuances may also then impact the actual flows that we then see at the end of the day. So these kind of variances in these temporal variances can help actually amplify the cumulative effect within a particular locale at the end of the day. So when you think of the athletic or the athlete spending patterns, um, we need to be able to consider basically what we would think of as the standard practice around that particular event. So maybe sporting teams arrive a week in advance for training or strategy or preparation. So some of these nuances have to be taken into account in terms of the data that you put in and input into the calculator. So it's important for us to be able to capture these as accurately as possible. But in addition, we also have, say, for example, the media and the logistics. So whether think of specialized technicians that may be there if you're broadcasting a particular event, um, how then do we then factor those in as well? The calculator does consider that and allow you to be able to input data that would be relevant to, say, for example, the media or broadcasters that are part of that particular event um, in that particular space. So these are some of the considerations that would relate to the actual data that you'd have to be able to collect and input for the calculator. And to also minimize, I think, the variations in terms of how we input data, we have to kind of track spectator and participant outlays. And basically, we have four critical categories that we consider. So the food and beverage, the transport, could be the retail, and then the event services themselves. So these categories help us kind of define the spending that we would use to be able to then collect data for those particular categories and input it into the calculator for us to be able to then analyze the different spending that we may see. Um, I think you'd have a situation where you could decide to be much more nuanced in the breakdown, but I think it might also then create some problems. So I think this is one thing where we thought, I think for now, if you have these specific categories, it makes it easier for the data collection to actually then happen and then feed in into the calculator itself. So when we look at the last section that I'll be covering would be the inflows and leakages. And I think what is important here is you may have what we consider as institutional inflows. So where event organizers may inject substantial capital directly into host regions for, say, example, venue operations, local security, temporary logistics. The calculator will track these kind of sponsorships that are received from external entities as well. And it ensures that this is basically treated as new money that's coming in into that particular locale because of that particular event. But you also have to think about the direct local allocation. So where organizers may face structural leakages, for example, tax obligations. Therefore, you may find that it may prevent 100% of the revenue being spent within that particular municipality. So this also had to be taken into account in the calculator. Um, so we had to factor that in terms of how we would then calculate the new income that comes in, taking into account some of these tax obligations that may arise because of the different types of sponsorship and injections that may come in into the locale because of the event itself. So you may find there's just some of the categorization that we could think about in terms of how we would also capture some of these leakages as well, take into account these different factors, where we have got category 6 with a high regional retention and category 1 with a low uh, local capture rate that we kind of uh, have implemented. So we find, I think, that larger demographic hubs tend to demonstrate higher baseline monetary absorption and lower outward leakages when compared to the category 1, say, for example. Um, and then the scenario analysis itself, you have to look at how this model stability works across different economic fluctuations. We had to look at how to test for the sensitivity in terms of spending assumptions as well. We had to think about how to balance these different economic estimates and but also to be able to ensure that we are able to provide a report that is quite transparent and helps in terms of being able to defend or support certain activities and initiatives that may come about in terms of the 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 impact itself. So these are some of the benefits. So the interactive what if dashboard allows the people who would be interested in actually looking at these different alternatives to actually then use them in terms of their own analysis, whether they also want to do any sensitivity analysis or tests or stress tests that they want to do. They will be able to then use the what if dashboard that is under the scenario analysis as well to help them in that particular endeavor. So ideally, what I've just gone through is trying to understand the thought processes that we had to engage with in terms of developing the calculator and some of the issues that we had to contend with and had to incorporate. So, for example, some of these buffers that we had to put in to help minimize some of these challenges that we may come across as we collect data, and hence we have inputted them in the background as um, as part of the multipliers to be ensure that we get at least a credible output in terms of our report and not figures that may sound inflated and may obviously then create problems when we actually compare them to what actually then is happening on the ground in realistic terms. So with that being said, I think Mr. Tarantal will then be able to kind of take you through to what through the calculator in terms of the what it looks like and what you expect to get and what to expect to input in the calculator itself. And with that, he will basically show you the different, I think he's going to do a comparative case of um, a large and a small event, mega or a minor event. Um, and then hopefully that will also then provide clarity around some of the thoughts that we had as we were developing the calculator itself. And then I think once he's done with that, I will then come back to then just wrap up before we move on to the next segment. Dylan, I think you can share and then take us through the comparative and
Okay, good morning, everyone. I just need to move this. Okay, never mind, I'll just do it this way. So I'll be taking us through the actual calculator. So we'll go from the theoretical framework discussed by Prof. Kumalo, and then we're going to see how we can apply that with the data capturing protocols from the previous 6 sections on how we can apply that empirically to our SAFEIC model. What we're going to do is we're going to apply it using the standardized economic impact calculator on 2 different South African contexts. Okay, so the 2 cases we're going to look at are 2 different archetypes. So we have the first archetype, which is a participation in a metropolitan soccer event compared to a smaller mid-sized rugby fixture. For the major footballing event, we're going to look at the PSL final, let's say versus in Johannesburg, which indicates or has a high attendance spectacle in a massive metropolitan hub. And then on the contrary side, we're going to look at the Currie Cup First Division semi-final, which is a smaller event hosted in Bloemfontein. And then the localized event match is in a medium-sized urban community. Okay. So I'm just sharing these slides so we can basically see it better. So on the left-hand side, we'll have our major football event, and then on the right-hand side, we'll have our minor rugby event. So in this section of the calculator, it's very important that we have the we add the four information, or add the four variables that are marked in red, and then variables marked in orange are given default values, but you can change them, and the values given as black, those are fixed values, so those cannot be changed, right? So for instance, with this black value, it's the total event days combined. So those are just adding the number of days plus the extra days pre and post. And then obviously that number will not be able to modify, because it'll always be, in this case, 1 plus 2 will always equal 3, right? And then another important value that we have to add is the location city and then the location province. So the location city province is important because of the way we capture our spending data. Our spending data was derived based on provincial averages. And then the sporting code itself is important because that determines what our multiplier is going to be. And obviously the number of days is a core variable because we need to calculate how long people stay in the area, and then also what their overall spending will be. Those only apply to the two of the four category of spectators that we have. So that would be for your unpaid lodges and then your paid lodges. Right, so on the left-hand side, we have all of our information added for the Premier League soccer match in Joburg. We see that it uses a type 2 multiplier, so that is indirect plus induced. And then we opted for a high multiplier based on what Prof. Kumala said, of certain aspects of an event that you associate with a high multiplier. And then in this case, we have our extra days pre and post event. We said that it is equal to 2. This is not 2 days before and 2 days after. This is 2 in total. So essentially what that means is it's 1 day before and 1 day after. And then our average length of stay for both the unpaid and the paid lodges is normally half of the total number of event days, which is just 1.5. All right, so in this case, both of these events that we looked at, both only lasted 1 day. So both of them have a total combined day of 3. The only difference between the two is obviously rugby versus football in terms of multipliers. And then in terms of the capture rate or the impact area, we had a larger metropolitan area for the football game compared to the rugby game, which was in the Free State. Okay. Then on to the next slide. Okay. So as we said, before we can calculate any sort of impact, we first have to perform our multi-stage filtration. So the way we do that is we start off with our total number of spectators. So for the major football event, we just added 75,000, and then for the minor rugby event, we have 4,000. It's important to know that for us to be able to capture it as new money, we have to ensure that we remove the counterparts that do not acquire new money or count as new money, and that would be our local residents. So with the default value that we normally have for this is 15%. But as you can see with the minor rugby event, we can change that to 35% because in this case, we are working inside of a cell, which allows us to change the values. So anyway, to get our type or our total number of non-local supporters, we just take our 75, multiply that by 15%, which gives us 11,250 in case of the major football event. And then in terms of our minor rugby event, we take the 4,000 multiplied by 35% to get our 1,400. And then the next step is then to determine how many of those non-local supporters are staying in paid accommodation, right? So we have to distinguish between our paid lodges and our unpaid lodges because of the way we collected our data. Our data was collected based on the spending of accommodation in a provincial area on both the accommodation itself and food and beverage, right? So we have to segregate these group of people or spectators called tape underscore PA, which stands for paid accommodation, and then have them separated from the unpaid lodges who will then obviously not pay for accommodation, but then their food and beverage will be calculated based on the food and beverage variable that Prof. Kumalo also explained earlier, which you'll see in the next couple of slides as well. So then in the case of of both of them, we have the default value, which is 60%, and then we have another proportion that we need to reduce, and that is to determine if these visitors or non-local spectators are actually at or in the impact area for the event itself. So therefore, we need to then multiply that by an additional 25% in terms of our football event, and then 45% in terms of our minor rugby event, right? Which reduces our total number of spectators to 1688 and 378. And then finally, we now need to determine our day trippers. Right, so okay, so before we get to our day trippers, we need to determine how many of those in unpaid accommodation are there primarily for the event. Just to determine the total number of overnight stays, because we need to also account for the payments that they are going to make based on the overnight stay, as well as any local groceries they purchase for the overnight stay, which is what the day trippers wouldn't do. So in this bracket, we have our unpaid lodges and the day trippers, so we have to separate them because the day trippers don't have overnight spend. So to do that, we then extract the unpaid lodges and then calculate how long they will stay. So then we'll just do the average overnight stay, which it was 1.5 for both of them since the event was 3 days long, or their stay was 3 days long. And then that would give you the number of of total overnight stays. And then, as I said, the final step is then to calculate our day trippers, which is then people that basically just come for the day and then leave and then not stay overnight. So they'll only have daily spending. So for that, we then, in both cases, we have a 15%, which is fixed, cannot be changed. And then we can determine which of these are in the area primarily for the sporting event. So in this case, we use the default value of 90% to get about 1,500 for the football event, and then 190 for our minor rugby event. Then, as I said, the provincial area is very important because of the expenditure on accommodation and restaurant. So default values are given from the calculator of 5,771 for Gauteng and then 1,786 for Free State. But then, of course, based on your data, you can also modify these values and then it'll change the subsequent calculation. Right, so if the explanation of from tape to tape PA to tape NA to your tape DT didn't make sense, we can go through it using this illustration again. So what happens is we start off with the total number of your spectators, total number of spectators, and then the first filtration system that is applied is that we remove the local spectators, and we're left with our non-local spectators. And then non-local spectators are then further filtered out to remove those that are here for other purposes, and then only those in the primary location, and then obviously those primarily in the location are then stripped into those 3 different categories of your day trippers, your paid accommodation, and your unpaid accommodation. Right, so of these 4 metrics that we felt were important to track in terms of spending, we have our food and beverage, we have transport, we have retail, and we have event services. So we have our default values again, but then obviously based on the type of event that you are hosting or trying to evaluate, you can change those values. And then just note that transportation, retail, and event services apply to all of our spectators, or even with the athletes and the media that we're going to look at later. But in terms of just the visitors or the spectators, transportation, retail, and event services apply to all categories, right? Then food and beverage only applies to day trippers and to those in unpaid accommodation, because food and beverage, as I said, is then accounted for in terms of the paid accommodation, right? So with our spectators that are in the event primarily for, or in the area primarily for the event in paid accommodation, they'll have their calculation done separately. And so again, we now look at the spending of a non-local athlete. As obviously we have to strip the local athletes first. Then we just So the only thing that we are inserting, we're not inserting all of the athletes, just the non-local ones, right? Because we don't want to still do the filtration system, and then it's easy also to detect for the organizer, then for the organizer to determine which of the spectators are not from the local area, right? So by default, we stated that that our sports athletes have to stay an additional 7 days. So that's just for any high performance demands, any protocols they need to follow, any pre-event media, and then also acclimatization and training and so forth. And then we normally find that our athletes are either sponsored by the organizer themselves or assisted in some way to attend the event. So that's what the percentage of organization assistance to non-local athlete expenses is. So in this case, it's 80%, which means that 80% of the expenses of the athlete is accommodated by the organizers. Right? So by default, it's normally 20. In this case, we just upped it to 80, which means that that reduces the amount of spending that the athlete has to make whilst they are at the venue. So as you can see here, instead of that normal 510 or 700, they only spend 64. And then instead of the normal 5,771, they only spend 1,154 on accommodation. And that's for the major football event, whereas for our minor rugby event, we have 60% assistance. So they only spend 714 on the accommodation and 68 on the daily spend. Right. And then the second part is our media team. So with the media team, they generally don't receive any assistance from the organizers. And in most cases, we have that they have to pay the organizers to be at the event. So this value might even go down to negative 20%. So have them pay a premium just to be at the event. So in this case, we have our 20 media personnel. For them, they have the same stay or average stay as those in paid accommodation or in unpaid lodging. So we don't add extra days for them. So they'll just have the normal 1.5. And then, yeah, so then based on their assistance, they'll then have to pay the full amounts for the daily expenditure and then also the accommodation in this example. And then I believe it's the same for, yeah. So it's the same for our minor rugby event where we have them also get zero assistance. So they pay the full daily expenditure of 170 and then the overnight expenditure plus accommodation of 1786. And then, so up till this point, we've now indicated everything that we need for the calculator to basically perform the calculation. To perform the calculation. And then the only thing that we're going to have to add after this is how much sponsorship we received, and secondly, how much we received in terms of match ticket sales. So this provides us with a snapshot of where we believe the calculator is going. So it'll give us information on the total accommodation paid by the spectator for accommodation restaurants. So those would typically be those staying in paid accommodation, plus your athletes, plus your media. And then total paid accommodation by the spectator. So these are for your unpaid lodges. And then food and beverage by your day trippers and your unpaid lodges, etc. Right. So from all of these values, you'll determine, is it being overvalued? Is it being undervalued? If it is being undervalued, then obviously you would then boost your multipliers. If it's overvalued, then you'd lower your multipliers at the end. Yeah. Right. So as I said, the final piece of information that you have to add is basically just how much you received in sponsorships. So either to help with running the event or to help pay the athletes or to award prize pools, etc. Right. So we have the 20 million for the major football, we have 10 million for the minor rugby event. And then in terms of total income earned, so as I said, from ticket sales, etc., to the non-local, to the non-local, no, sorry, to all of the spectators. And then we'll have our earned income, which is the summation of the two, and then total non-local organizer revenue. And then we have our capture rates, right? So in this case, we have percentage of the organizer revenue spent locally. So for the major football event, it's at 80%. And then for the minor rugby event, it's at 65%. So the difference with that is just that some money will immediately leak out of the host city to pay for things like taxes, prize pools, etc. And then we reduce the gross institutional income to the net retained, in this case of 17.5 million. It ensures that we only report on capital that directly enters the local banking ecosystem and then circulates through local businesses, either through the type 1, type 2, or the indirect and induced effects. Right, so what this is illustrating is just that the money behaves differently. So as back to what Prof. Kumalo says, so we have a category 1 rural node, which has nearly 50%, 52% of all of your rands leaking out immediately because they have to import food, tent, security, etc., portable toilets because it's not being manufactured locally. Whereas like a category 4 with the Bloemfontein one, with the mine rugby event, that retention improves to about 68%. So therefore, they perform better in terms of the multiplier effects inside of the economy. And then obviously the category 6 metropoles like Johannesburg, they have that 80% retention because basically the full supply chain exists inside of their province. And then the SAFEIC model will just then obviously adjust for these values and then perform the calculation. Sorry. Yeah, so we start with the total direct impact. Okay, so then in terms of the total direct impact, we then have a summation of everything again. And then we can basically reduce this into those three important components. So we have the direct impact, we have the indirect plus the induced impact. So obviously if you choose a type 1, you'll only have indirect. If you choose type 2, you'll have indirect and induced effects. And then that ends up with our final slide, which is basically a summary table indicating instead of just one distinct value, we have a range of values, right? So we can have a value for a low intensity multiplier. So for instance, with the minor rugby event, that's at 22 million total economic impact, and a 1.6 multiplier, which then increases the range up to about almost 25 million in terms of the total economic impact. Yeah, so then as I said earlier, I believe that these values are too high or too low, you can then adjust into the 6 different scenarios, right? So the first is that we can change from type 1 to type 2. So if you feel like type 1 with just the indirect effects is insufficient to explain the amount of impact that your sporting event had, then you can switch to type 2. And obviously with each one of the types, you can then switch between the varying intensities, right? Then for mega events, the multiplier state to stagnate, but the value added then is manipulated to then basically just change the number of jobs created. Yeah. So then, as I said, it gives you economic steering wheel. So basically calculates all the impact that looks disproportionately large. So then we can just basically just switch the intensity lower or higher, depending on how you feel about it. Okay. I think that's it for the calculator itself. Prof. Kumali, just want to share your slides again because I had to switch to the higher definition slides. So I don't have your slides here. Yeah. Yeah, so once Prof. Kumar is just ready to share, we'll then switch over to his slides and then can just take you through the final step and then discuss anything in addition. Yeah, thanks, Prof.
Thanks. Thanks, Dylan. So just to wrap up, I think it's just to remember that ideally what we need is the new money, and then to try and understand how it will filter through the local economy. Also understanding maybe the assumptions that you may want to use in terms of your choice of different settings to influence your multiplier. But the use of good data is very important for the calculator. And I think one of the things that we've discussed as well is I think there's the need to create more of like a centralized sport event database, which would use a centralized instrument that can help us then easily input some of the information into the calculator, and also to further nuance, because depending on the information that we have, you might be able to further nuance this to different levels of the economy, depending also how much information is available from the different levels of the municipalities, to be able to go down to that level in terms of isolating some of the effects, to be able to focus on a more nuanced multiplier for a particular area. So I think a bit more research is probably needed to be able to work on these kind of multipliers and build that evidence as well to help improve the calculator as we go. But otherwise, thank you, colleagues. I think that's as for this presentation. I think we'll hand it back to Mr. Chwene.
Thank you very much, Prof, and thank you very much, Dylan. I think now we'll just open the floor to questions.
Thank you, Prof. Kumalo. I think if we could perhaps start with the first question in the chat that was raised by Dr. Kumalo. She's also raised her hand as well. And then after that, we have Teboho as well. Thank you.
Good. I'm just trying to figure out, am I audible? This is Dr. Kumalo.
Yes, Dr. Kumalo, we can hear you.
Oh, okay. I think the question is, and thank you very much for a very comprehensive presentation. I do want to echo and reiterate the importance of this tool, especially for us as government, but I think for the industry and the general public as well. I just wanted to understand, in terms of the question I wrote on the meeting chat, how does this use of this tool safeguard against a possible data manipulation when capturing the information, which could, as I say in the meeting chat, inadvertently lead to a distorted outcome? Is there any way that there are safeguarding measures that ensures that the information that is fed doesn't ultimately lead to that distortion? Thank you very much.
I think Renee, you indicated the two people. I'm not
It's
sure what
Tebogo.
second.
Tebogo, you're up.
No, thank you. Can you hear me?
Yes, we can.
All right. No, thank you so much. And also echo the same sentiments of the DG around, the comprehensive presentation. And thank you for this instrument. I think for us, it's an instrument that is really highly welcome, given that many a times using public funds in other oversight structures, there's always a question around the value generated through, conducting or staging any particular event, either major or minor event, because I think when you look from the lens of the economic spin-off that are generated through these events, such can only be inferred without necessarily producing any tangible evidence of how that has been impacted. So I think having this instrument will go a long way in ensuring that when we do our activities and compile our reports, it's not only focused on the injections that we put as government, but we do also produce the socio-economic spin-offs without necessarily being ambiguous about it, but have some sort of a tangible evidence through which we can refer if we are to embed this system or instrument into our events. I think it's highly appreciated from that point of view. Now, my question centers around the applicability of this in events that perhaps are not local but are of international nature, where we are making a significant contribution to showcase the country, and obviously with a view to generate a maximum economic impact through that. But I think of importance there, it's not even about the economic spin-off, but it's about the perception index that comes as a result of our global presence in this global events, whether this can also be used to assist and measure such, because obviously the socio-economic investment is not made in our communities, but it is made for our communities, but in global events, so that are not necessarily hosted here. What form of and how can that be enhanced by this particular instrument? Secondly, I hear this thing of what I may refer to as exaggeration of data, and I think it's in line with what DG was asking, where numbers may be put, but not necessarily refer to the actual, the actuals that are experienced on the ground or that would have been real. How do you manage to? How can we do that? And lastly, or how can we manage? What are measures in place to help us minimize such a manipulation should it occur? But lastly, it is more also about the use of this data, and integrating this very same instrument to the existing platforms. For instance, I don't think we should scratch our heads to know what is the population size of people in Johannesburg when there's a census information that could also be integrated that will help us to clearly measure in the day or two or space that we're there, what has been the economic contribution before, during, and after this particular event, having looked at all the factors that may help us derive a particular sense out of the data that is being produced. So I think this is to ask whether the instrument itself has been linked to, what could be the existing database instruments that we have in the country, and that obviously are verified and bona fide instruments, and which one are those? And I may even include something as simple as an ID linked to a Home Affairs system. How integrated is this to use those particular systems? Thank you.
Thank you so much, Prof, sorry. Yolanda LaRue, your hand is up.
Good morning, everyone, and thank you. Thank you very much for the presentation.
Hi, Yolanda. You are breaking. Could you please pose your question?
Can you hear me now?
Yes.
I'm saying that the presentation was really pitched at a level of government and the lowest level then being municipalities. I am representing communities within the Tsitsikamma area, very far or distant from the Nelson Mandela University. And one of my questions was the fact that this is really pitched at a government level, and whether the calculator is usable by communities. And I went onto your website, and I see that the tools are there, but being at a community level, it's not that easy to navigate the tool. I see there's also one for festivals. So with NMU be a partner and SACO being hosted at NMU, my question is, how does SACO then engage with communities, and is there a potential for capacity building in terms of these communities that is not in the metro, for example, but are in outlying areas such as the Tsitsikamma? Because even though this is a fantastic tool, it's not that easy to use it at community level. And I think there is a responsibility then on the South African Cultural Observatory and NMU to engage in capacity building. Thank you.
Okay, Yolanda, let me jump in there. My name is Titus Chweni. I'm the Marketing and Communications Manager at SACO. Yes, we do partner with communities. We do partner with the industry itself, where we offer various forms of workshops, from capacity building to dissemination workshops. So, for example, because this calculator is important, we chose to do it online so that it can be national. But there's nothing stopping you if you have an event or you want us to assist in terms of capacitating your area. Feel free to contact us. You can give us your details, or we can give you hours and we can take it from there. But SACO, with the Department of Sports, Arts and Culture, does workshops around the country, whether it's rural or urban. We don't discriminate. I hope I've answered you. Thank you.
Yes, thank you. You have answered me. I would appreciate if I can get your contact details, and I will drop my contact details in the Q&A session as well. Thank you.
Welcome, Yolanda.
Thank you very much, colleagues. Thank you for the wonderful engagement. We appreciate this. So maybe let me start off with the, addressing the issue around how do we guard against data manipulation, which came from Dr. Khumalo. I think that's one of the things that at this point, the first thing is I think is it's beautiful that we have this tool that we are developing. And it may take a few phases, but I think the fact that we have it is great. I think one of the things that I mentioned as I was closing off was the need for a centralized kind of database, which will be populated using standardized instruments that can then help us in terms of credibly ensuring that we've got data that is not either inflated or manipulated for certain purposes. So at this point, because we are basically more or less just relying on the ethical values of people who may be wanting to use this information. But I think as we develop, I think the idea of having a database that is credible and managed using structured instruments will help with the kind of information that we then use to input into the calculator as well. So the bit that the calculator can do is minimize people who may try to, for example, inflate multipliers for certain purposes. That bit, the calculator has locked them in, which is why when Dylan was presenting, he was mentioning that there are certain things that you can input and there are certain things that will not be changed because those are safeguards that we've put in to ensure that we don't inflate the impacts that we have. But as we develop further, I think it also speaks to the other points as well that were raised, where, for example, if I take Yolanda's point, that as you find that as we develop this instrument as well, your ability to actually then go down as far as local communities, right, would actually then be possible. And that development, I think, will take place as we keep improving the calculator itself, as we keep improving the calculator. So I think the database for me is one of the key things that we need to really also work on. Secondly, I think it's around the multipliers. So to Yonanda's point again, that if we can then develop much more nuanced multipliers depending on the level of our focus area, right from the community to provincial to national, that will also help in terms of how the instrument would function. Because in as much as Yolanda highlights that the information that we've used is mainly municipal level and provincial, it may not necessarily be a true reflection of a particular community, for example, in the Tsitsikamma space. It may not be a true reflection of that. Hence, the need for us to then develop instruments that can help us actually then capture the actual multiplier effects of certain localities as well would be quite key. To
Sorry,
speak
Prof.
to Tebogo's point. Yes. Or Dylan?
Can I just add something on the safeguarding? So with the calculator, we did give more freedom than what I wanted to. So I wanted to have things like input validation, I wanted to have encryptions and etc. But as Prof. Kamal is saying, is that we are using it as a database collector as well. So once we have the data, some of those yellow tabs will turn black, which means that they will be set in stone. Like we will either remove the type 1, type 2 multipliers, we will remove the intensities because based on the information we have, we'll be more strict with how we calculate all of these multipliers and therefore enforce it on the user. And then also once the user completes the full calculation, they are given a report. In that report, they'll see exactly what they inputted and therefore see what is inflated to maybe give them a certain type of outcome that they are fishing for. Yeah, so that's all I wanted to add on the safeguarding, Prof.
Thanks, Dylan. And then to Tebogo's points as well, I agree with you because it shifts the focus from just not just injection, but we now have evidence that we can use to show the actual value in terms of the different interventions and activities that we will actually be facilitating. So it's no longer just about the injection, but actual evidence around the value that we may be creating using these particular events. I think in terms of the applicability when we're thinking about these international events and the perception, the beauty of it is because we are able to get this information, we can actually now start having actual economic impact study reports on different events. And these basically then create this credible source of information that helps boost the perceptions around some of these international mega events that we may have. So this information now, it's not just going to be information, but it's information that we can use to create reports that can help actually either address certain issues that we want them to address in relation to our perception around these events and discuss with credible information and support in terms of the actual data that is presented by these tools. It would be good to integrate these tools with other databases, as you say. I think as we further develop, maybe those are some of the areas that we'll need to look at and where we don't have to. Currently, I think as Dylan may have highlighted, that we'd have to keep updating some of the information in a more manual approach. But once you have the ability to draw from other databases, that would be quite good. And I think with the way technology is moving at this point, these are some of the things that we can tap into that can help further make this calculator efficient or to improve the efficiency of the calculator in terms of how we can then benefit from all these different synergies around the different databases that we have, and then actually get much more credible reports that we can then rely on for policy as well. I think I have covered. I'm not sure if is there anyone that I may have left out? I think I've covered all the questions that I noted. Renee, I'm not sure if there are other questions as well.
Thanks, Prof. It looks like everything has been answered on the chat. We've answered all the questions as well. And currently no one has their hand up, so we are covered. Thank you. Titus, would you like to come back as our chair?
Yeah, I was about to say, given that there's no more questions, thank you very much, Prof. Thank you very much, Dylan. I will give the platform to our project manager of SACO at DSEC, Takalo Mavundu, to just give us some few words for closing. Thank you very much.
Good afternoon. Oh, is it still morning? Yes. We're almost in the afternoon. Good afternoon, everybody. Good afternoon, Gigi, Kumalo, good afternoon to all senior members of the Department of Sports, Arts and Culture and everybody in the platform. Thank you so much to Prof. Kumalo for such a wonderful presentation together with Dylan. And from a research perspective, it is quite sad sometimes that funds are put in place to come up with beautiful researches, and at the end of the day, we sit with beautiful findings and never get to see them being implemented. So listening to the presenters, I realized that it is quite important that this kind of calculator cannot be kept only to the few that were part of this presentation, but it should be expanded and be presented to even other departments, our sister departments, because when you listen to the presentation, you can see the role of the basic education, you can see the role of DTIC, you can see the role of economic development, also utilizing this beautiful tool. And as a nation that is still battling issues of unemployment and trying to grow our economy, this tool would also assist us in measuring the impact that the sports or our events are able to assist us in growing our economy. So thank you so much for this beautiful work that was done by SACO, especially in partnership with us as the Department of Sports, Arts and Culture. As a takeaway, I would say, let us all go out and make noise. Let us not stop today presenting this tool. Let this tool be presented in other sister departments, in municipalities. Let us also see ourselves rolling this tool to municipalities who are usually the ones that get to host these events, so that they may know how to use this tool. So from the presenters and also the organizers of this meeting, thank you so much, and back to you, Titus.
Thank you very much, Takalo, and thanks everybody for attending. And please keep up with our socials, as we'll be hosting other workshops on the work and the research that SACO does with our partners and the Department of Sports, Arts and Culture. And tomorrow we also have another workshop that will be dealing with the languages. Please feel free to join. And with those words, I'd like to thank everybody. See you soon. Bye.
Thank you. Bye.